All right, let's continue the conversation with Point72 Asset Management Chief Economist Dean Maki, who says real GDP growth remains robust here, as the chair acknowledged as well. Dean, what was your main takeaway of Powell's message, I guess, relative to what you were expecting?
It was largely as we expected. There was speculation he was going to take a strong view on our star and things like that. That always seemed unlikely to us. I think the new thing in this relative to the past was his concern about growth and the labor market perhaps being too strong. He hasn't really said that directly before. So to me, that was the new thing that he introduced.
And that being the case, does it leave investors very acutely watching for signs of deceleration in the economy, as I just asked Art Cash? And it seems like it might be the thing now that's going to determine where we're headed. Although I think importantly, he didn't really want to tip his hand about the coming couple of meetings.
Yeah, I think Powell would prefer to be done now, and he hopes that they are. And I think the real determinant of that is going to be core inflation. If core inflation keeps coming down, then I think they'll live with the stronger growth that's coming through. If it does stop falling, then they're going to be very concerned if growth stays strong.
I know that in general, GDP growth is tracking this quarter to be well ahead of most estimates, maybe well ahead of what it's going to end up as. But can this economy can it absorb this level of longer-term interest rates, what the mortgage rates are doing in response, and a little bit of erosion around the edges of the consumer credit picture?
I do think this economy is pretty robust right now. Consumer balance sheets on net are actually quite strong, and the housing hit to new housing construction, the bulk of that has already occurred. So I think that we're in a pretty strong growth environment right now. Something like 2% growth over the next year is what we're expecting.
Dean, I was struck that he didn't spend a whole lot of time talking about the U.S. consumer when that is such an important part of GDP. And we've been trying to decide if we think the consumer is resilient or if they're pulling back, seeing as it seems like we're having a little bit of mixed messages based on what we're seeing in the data and then what executives are telling us about looking forward.
Yeah, I think there's a couple things going on there. I think on balance, consumer spending is quite strong, but there's things happening that make it unclear at an individual retailer level that that's true. So, for example, we're having a goods to services shift right now. So good sellers of goods are having a harder time than sellers of services. Plus, internet sales are taking a huge share from in-store retailers still. So that's another reason why some of the department stores, et cetera, are not seeing very good sales, even though overall consumer spending growth is quite strong.